Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're going to look at the dot plot from the most recent Federal Reserve meeting because there's at least one Fed governor that's saying, what rate cuts? You have no idea what we're talking about. We're going to look at the data. Okay.
There's always one. We looked at that earlier. There's always like one crazy one.
Yeah, exactly. So this is the most recent statement basically put out by the Federal Reserve as of the meeting here in March. But basically, economy is still expanding at a solid pace, job gains across the board, unemployment rate has remained relatively low, and inflation is eased but still kind of high. All right, that's basically what you need to take from this whole thing. Okay,
Okay,
and
cool.
they kept the target rate flat. What's up?
No, I thought you were gonna read the whole thing. I was like, oh man.
No,
All right, that's the
no.
summary.
All right, so this is where we are, right? We're still up in this plateau with the Fed funds rate, like between the 5.25%, 5.5%. Now, as a result of the Fed tightening, we have seen inflation come down. This is the PCA data from the most recent month here. You still have core PCE is now a little bit above headline PCE, but still above this 2% target that the Federal Reserve has, right? So it's a little bit more room to go there. Now, when we look at the unemployment rates, we did see a little tick up. The most recent data up to 3.9% from I think 3.7 before. The number of jobs added in total has been on a consistent downward trend, but still positively adding jobs month after month. All right, that's where we are right now, kind of reinforcing the data points that the Federal Reserve is looking at. As far as GDP goes here, we are still positive GDP. We did have, I forget exactly what the total number it was here, but it was like 3.2%, I want to say. For
Solid.
Q4, we're still having economic growth in our economy, all right, the United States here. The Federal Reserve did highlight the fact that they're still tightening monetary policy by selling assets off their balance sheet. Remember this? We haven't looked at this in quite a while, but they peaked at almost $9 trillion in kind of assets on their balance sheet. They've
Jesus
now tapered
Christ.
that down to 7.5 billion.
Yeah, that's great. It is important to note this is we looked at this before. When you see these big swings up, it really never has gone back to where it was. So
Mm-hmm.
like you can see, 2013 we had a big swing
Yeah.
up, in 15 it just continuously goes up. So
Yeah. So the fact that they've had a nice kind of sustained phase here of tightening is actually pretty good. I'm happy to hear that they have the ability to kind of reload the cannon or bazooka, so to speak, and bring it to bear in the future if necessary. That they've offloaded here $1.5 trillion in assets. I'm sorry, I said billion earlier. It's trillion. Okay, this is the Federal Reserve of the United States, um, and that we still had like a good economic kind of activity since then. Now, what I want to look at here, this is kind of where the Fed governors think we're going. If you're looking at the December projection and then comparing it to the number right above. So GDP for 2024, they had 1.4%. Now they have 2.1. Unemployment rate, they had 4.1%. Now they have 4.0. PCE instead, for headlines stood flat at 2.4. And then core PCE, 2.4 to 2.6. So what are you really getting out of this? You're saying that the economy is going to grow a little bit better than they thought even 3 months ago. They're saying that unemployment is not going to be as dramatic as they thought 3 months ago. The increasing unemployment rate still going to increase a little bit from here. That headline PCE is going to remain relatively flat, but core PCE is actually going to be more problematic, they think now, than they did 3 months ago. All right, so that's their expectation for the rest of this year.
okay. I
Thoughts?
mean, it. He, Jerome Powell has said it's going to be sticky. That's the one thing is he'd rather keep rates high for longer because it's a huge issue if you cut too fast because then you have to go back up. It causes a lot of different consequences. I I let's just say this: I don't trust them farther than 3 months out.
Okay.
So
All
like
right. I
whatever
like it.
their 6 month is, zero. I don't care. It's probably
So
wrong.
all these numbers are for the end of 2024,
Right.
meaning like 9 months from now. All right.
Right.
Um, the interesting thing here in the headline that you see a lot of agencies reporting is that they're still anticipating three rates cuts for this year. Right?
I
But
think it's
we
gonna be
saw
two.
that many things look a little bit worse than they did before. Right? This is what they're basing that on. You have like this cluster of Fed governors that are voting for this 4.5% here, which would be 75 basis points down from where we are right now. Right? All right, so that's what they're kind of counting on. That's by the end of 2024. That's where that headline comes from about three rate cuts still anticipated this year. But if you notice here, there's quite a few governors that are above that level. All right,
I think it
like
would be safe to say 2 to 3 rate cuts.
Okay.
I think two
Okay.
is real because I mean just looking at that display, you have another five for two. So I mean the vast majority
Yeah.
are 2 to 3.
And then to me, this is the fascinating part. Like, look at this Fed
Yeah,
governor.
I don't know.
You know,
He's
and you know, the funny part to me is now, like, I don't know, man. Maybe it depends on the mood, depends on what I had for breakfast. But this person feels like more on target to me than the others do because they're trying to say that they're still aiming for 3 rate cuts this year. But you just saw that, as far as like their kind of estimation around economic activity this year, or in particular core PCE, they just bumped it up 0.2% over the last couple months. That it's still well above like their target at 2%, and that they are actually trending the wrong direction in terms of their expectations over the next 9 months for the rest of this
so,
year.
so that guy is essentially saying no rate cuts through 2025.
Yeah,
Oh,
yeah,
I don't know. I don't know about that one. I mean, I
yeah.
I don't think
The
so.
truth is probably somewhere in between. I think saying that we're going to still get 3 rate cuts this year is probably a little bit too aggressive, and that we should be definitely be dialing back our expectations of rate cuts in 2024, unless we see a major economic crisis. Is kind of my thoughts there.
I would say the guy who's at 5.5 for 2025 and the guy who's at 2.5 for 2025 are both equally crazy.
Yeah, fair enough. So they also put out these kind of individual like voting where they show you kind of what their projection was and where they are now, right? So GDP, this is where they originally all these kind of dotted lines. That's where the Fed governors were voting before. And look at this shift to the right for the rest of this year. So they're saying the economy's hot. The economy's growing better than they originally thought, even 3 months ago.
Yeah,
Right?
well, it's fueled by like five companies.
Yeah.
But yeah.
Unemployment shift to the left. They thought unemployment was going to rise more than it is. So, you see these dotted lines here once again. You see more white space now. That this is kind of shifted towards the left as far as unemployment rates not going to be increasing as much as they thought even 3 months ago. Headline PCE basically flat. There's no real change here from where they thought it was going to be 3 months ago. Core PCE, however, look at this. Look at this shift. Look at this big empty range here. Boop, everyone popped up, like a 1.1 to 0.2%. So there was definitely a shift, even in the last like 3 months, where we're saying core PCE is actually going to be much more problematic than we thought. So I
Yeah,
think
I
that's
mean, it's definitely going to be sticky. I don't have a. I prefer people who have watched the TLT videos that I do. I'm actually completely okay if there's no rate cuts this year because that gives me more time to make more money. So I just don't. It's killing the housing market. There's a lot of problems where only what's it Blackstone what was it?
yeah.
What is it
Yeah.
Blackstone?
Blackstone is a different company, I think.
No, it's crap.
BlackRock.
BlackRock, thank
BlackRock.
you.
Yeah.
Only they can buy houses, right? There's like no one else can. So I just don't think it's going to happen. I think if you look at those other indicators, which I'm not saying that they're super accurate, but everyone's saying that May is going to have a large chance of a recession of this year. So I don't know.
Yeah, sure. I believe that you can target that well. But same thing here for the Fed funds rate itself. Just in 3 months, you're looking at this. Look at the shift right here. Okay, there's definitely a pretty dramatic shift up, I would say, in expectations since the last meeting. But people are still saying, "Oh, still 3 rate cuts." I think that the likelihood of that is becoming lower and lower as time goes by here. And that's really the last thing I wanted to highlight as far as like how likely we are to see these rate cuts coming this year at 75 basis points.
But what does Vinny think? How many are you saying?
I don't know. It really depends. If we do not see a dramatic like societal level economic crisis of some sort, I wouldn't be surprised if we don't see a single rate cut until like after September, and at September maybe 25 basis points.
Okay, so
I think
I'm
they're good.
going. I'm similar. I'm going 2 rate cuts, 25 apiece.
Okay, but starting it's not until like September now at least.
I'm July to September.
I think it's going to
I
be
just
later.
It's very possible. The next 3 months are going to be fairly telling. If
Yeah,
it stays the same, doesn't change, then they should not, because that's just going to cause problems. It's that short term problems, long term success. It would cause a little bit of damage, but it would be better for us in the long run. So I don't know.
I agree, and I think that's the lesson he's going to stick with. That's why he's going to be even more restrictive. That's probably Powell voting all the way up there at 5% next year. I think.
We'll see.
He's
All
the
right,
man.
guys. Let us
See you
know.
next one.